Hey everyone, welcome to Investing for Generational Wealth. I'm Keshav Kolor from Clive Capital, your host. And at Clive Capital, we help high earners just like you invest outside of the stock market to passively achieve long-term wealth generation through superior risk-adjusted returns, long-term passive income or cash flow, and tax benefits. Together with investors, we've helped our passive investors invest into over 1,000 apartments so far under renovation and a little over 300 homes, single-family rental homes under development. Before we begin, a quick disclaimer, we're not financial advisors. All investments are subject to risk, including the possible loss of the money you invest. So perform your due diligence before making any financial decisions, and of course, consult your CPA, your attorney, your financial advisor, your trusted professionals, etc., before beginning investments. My friend Don and I here are just dressing up and chatting away and having some fun. None of this is any advice at all. So, welcome to today's episode, Investing in RV Campgrounds. Today's guest is Don Spafford. Am I pronouncing that correctly?
Yes, great.
Okay. Thanks for being here with us today, Don.
My pleasure. It's always happy to share what I know, I guess, and what I've discovered to help other people see what else is out there.
If you could kick us off and just tell us about your background, where you started and
Sure.
then how you got to where you are today.
Yeah, my pleasure. So, when I guess go back how far back we go, I guess, but I grew up most of my life in Nebraska, around the Omaha, Nebraska area. I went to school out there at the University of Nebraska at Omaha, which is basically right next door to Warren Buffett's house, right? So, I kind of grew up in that atmosphere of Warren Buffett, Berkshire Hathaway investing. Um, Ever since I was like 14 years old or even younger, I always had an interest in investing and money and making it work for me. This is even pre-internet days, so I would actually I got my first job when I was 14 years old, and I would on my breaks there grab the newspaper, look at the stock numbers that were in there, see what's going on. So I always had an interest for investing in money, and so I went to school there, and got actually four majors, graduating in finance, banking, investment science, and portfolio management, and accounting. The goal at that point was I really wanted to go into that wealth management, financial advisory type of a role for my career. But unfortunately for me, I guess, is I was going to school part time while I was raising my family. By the time I graduated, was the spring of 2008. So right before all this market crash was about to take place and go on. So that obviously affected my goals and objectives for what I was going to do for a possible job once I graduated. The company I was working for was already a financial industry company, and I was very close with the owners of the company, and I was going to move into this kind of like a hybrid role they're going to create for me, about half time, maybe portfolio management, another half doing something else. But when this all happened, of course, and they started laying people off, they were like, well, we can't really justify creating a position for something we don't need while we're laying people off, right? So I got put on the back burner, and then as those were around that time, we realized, a lot of the major financial firms were either going out of business or laying people off majorly. So it was almost like there was no chance I was going to do something with this career anytime soon. So I decided to be happy I had a job, I guess, that I had job security. So I kept my head down and kept working for years, a lot longer than I probably had intended to at the time. But then around 2012 or so, my wife became a realtor, and started working with investors as some of her very first clients, which is what made me start looking into that, like thinking about how I can invest in real estate and how to make that work. So prior to that, I was focusing on stocks. I'd been investing in stocks. Actually, I took advantage of the 2008 crash to start buying things cheap, but I never really, even though I saw these housing markets crashing around me, the prices coming down, I just didn't know what to do or how to do it to make sense, I guess. And so anyway, so as I got into it, started researching this point now, 2012 or so, I was like, okay, we need to make something work here, because there's definitely opportunity here. But around that same time, we decided we needed to move from Omaha out here to where I'm at now in Idaho, to help take care of my mother. So I kind of put all that on hold for a bit. We moved out here in 2015. Got back into it a little bit later, 2017. I actually bought our first property. We bought a fourplex, and I used some, I guess you'd call it creative financing, maybe. I didn't really have a whole lot of savings for the time to do a big down payment, but I found, or I discovered, I guess, that I could take a loan from my 401k, something I never even considered before. So I borrowed from my 401k for the down payment, and I used a local lender that would do a 10% down payment on an investment property. So I got this fourplex at the time. I think it was like, I don't know, around 270,000 maybe, which is, super cheap today compared to today's prices. But so I put like $26,000 down on this fourplex. Most of that borrowing from my 401k. So, and then within a few years, I mean, that property had, appreciated more than what my 401k balance is worth anyway, after, that many years of putting money in there. So I definitely saw the power of real estate. I later actually refinanced that same property, pulled over $100,000 back out of it. So I've, 4 times or more what I put into it, I pulled back out of it and kept reinvesting that. So, so that's kind of where I got my start with that first fourplex in 2017, and then started to scale from there. About a couple more, about a year and a half later, then eventually got moved into some commercial things, got involved with some development projects. I got triple net lease commercial retail building that me and some partners built. Got involved with some build to rent projects, building large multifamily hold projects. But I was, at this point around 2021, I was searching for just higher cash flows because these development projects are great, but they take some time before they can create income, right? So I wanted some good cash flow now. And to be honest, as I was looking at the multifamily deals that were out there, the ones I've tried to find myself to underwrite and find some good numbers, nothing was really strong enough to convince me that I wanted to ask somebody else to invest in it. And I looked at other syndication deals that were out there, and nothing really got me excited, I guess, for what I considered low cash flows on there. Single digit, 4, 5, 6% cash on cash was just, nothing to get me excited, right? I was looking for double digit, high numbers. And as I was at this point, I was still working that same job I had back in the 2008 crash. I was working for this company. When I moved here to Idaho, I started working from home for them. And so as I was working all day, doing my job, I'd be listening to podcasts, all day long, just consuming information, learning more. And one day on one of these podcasts, I heard somebody else talk about, RV campgrounds and the multiple income streams they have and the high cash flows they produce. And that really got me thinking, mainly because, I live in Eastern Idaho. We're about, less than 2 hours away from Yellowstone Park. Big camping area. Most of my neighbors have RVs. Pretty much every house here has an RV pad as part of their parking spaces. And so anyway, so I realized there's potentially an opportunity here to really get into something that is unique and different, where I may tap into basically higher income people, high net worth people that can afford a luxury RV, to then possibly invest in these type of opportunities that they might not otherwise invest in other types of real estate. Which I did some of my own research, as you mentioned in the beginning, to do your own due diligence, do some research. I kind of did that myself, just asking my neighbors. I actually spoke with many of my neighbors in the past about investing in real estate, and it was something that most of them had no interest in. They didn't understand it. They were kind of afraid of it. They saw, of course, during the time of COVID, all this stuff happening with eviction moratoriums, people, going on, I guess, sort of going on strike, I guess, putting chaos in the streets, we'll say. But so they were like, no, thanks, that's not for me. And so when I spoke to them about potentially investing in RV campgrounds, many of them realized, yeah, that actually sounds pretty cool because it's something they understand, they use them. It's not so foreign and scary, right? So, so that's where I kind of realized that, yeah, there's this opportunity here for people that could possibly invest in these that may not otherwise invest in other real estate. And I guess what really got me excited, when I heard this other podcast, only talking about it, was that the potential for high cash on cash returns, like really solid double digit numbers, and that's what got me interested to want to learn more. So I started just networking, going to some webinars, going to different events, and trying to find people that were in that space. Initially, I guess my thought was somebody that buys these would probably want to buy something out here in this area close to Yellowstone. It makes sense. So that was my initial intent, was just want to get my foot in the door, find somebody that wants to buy out here. I can be their boots on the ground. Yeah, just give me a sliver piece of the deal just to be involved and learn the process. And in doing that, I eventually came across a couple guys that had just bought their first property and were looking to expand and build a team. And that's when we met, and kind of everything seemed to align. And and they invited me to join with them, and I accepted, and here we are today. So it's a kind of a quick summary of everything that led up to this point, but yeah, it was definitely more of that searching for high cash flows was my objective that led me to find these RV campgrounds.
Nice. Okay. Okay. And again, for those of you listening, joining in with us live today, please throw your questions in the Q&A and we'll get to them as they come. This is a very interesting asset class, one that I have no experience or knowledge about. So I am excited to just pester you with questions.
No
So
problem.
RV campgrounds, initially, this is me being ignorant. I sometimes mix it up with like mobile home parks, but I guess RV campgrounds, is it really more of like a luxury? Is it glamping? Is it that kind of thing? Or is it like a staple where people need to live?
Yeah. So that's good point here to clarify, and that's is I think in a big area of some confusion for some people to try to explain. So first of all, it's not mobile home parks, right? Just to get that distinction from the very beginning. These are not mobile home parks. And a lot of people use the term RV parks. I try not to even use that term because for me, an RV park is basically similar to a mobile home park, but just with RVs that people live there, kind of year round. And you see that a lot in Texas. There's a lot of those that are like your oil workers that will just live there while they're working on the oil fields or whatever. So RV parks are not what we do either. They're not long-term living, affordable housing, if you want to call it that. We are more again on this RV resort, RV campground type of outdoor hospitality is what we call it. So it's more of think of like an Airbnb, short-term rental, hotel kind of thing where people typically make their reservations 6 months to a year in advance in most cases. Yeah, to come out to a place where they want to go essentially take a vacation, go have some fun, go out for a weekend, whatever it may be. For right now, that is today, this last week we had Labor Day. That's a big Labor Day weekend's like big time where people go out, go camping for the full weekend, have some fun, go to the lake, go boating, whatever it may be, and then they pack up and go back home, right? So that's kind of what we're focusing on is that kind of short-term stay, vacation kind of getaways. You get some people we call it seasonal campers that may stay for like a full summer or full winter, or at least for maybe people are full-time RVers that travel around the country, stay in a place for a couple weeks or up to a month, and then they kind of move on the way. So that's kind of who the crowd we're catering to, more this like short-term stay, just fun vacation getaways.
Got it. Okay. What is your business plan typically when you're acquiring these RV campgrounds?
Yeah, so we are in most cases if we're buying an existing campground, we're looking for well, that's what we're looking for, but in most cases it's like a mom and pop kind of ownership, right? Where somebody they may have built it from the ground up, or they bought it at some point, or they inherited it from their family or whatever. But they are the owners and operators. They probably live there on site to manage it day to day. I say in most cases they're like that. Your owner operators that are just there because it's what they enjoy doing, and they get to the point where they're maybe eventually burnt out because it's like hard to really take a vacation while you're kind of there all the time, and you feel like it's the demand needs you. They're maybe don't want to pay payroll to somebody else, or don't trust somebody else to run it. So that's kind of we're looking for these places that are operating well, right? They're doing decent as is. They've got a good occupancy rate where people are coming and staying and having a good time, good reviews, but they just lack either an infusion of capital to really enhance it and get it up to where it needs to be really be great, or they just lack the resources or know-how, I guess, to really go on the technical side and have a nice website with online reservations and all that kind of stuff. And so that's kind of what we're looking for. These ones that are have opportunity, right? It's kind of similar like when you're looking for a multifamily, you want to find out what's your value add. Ones that can you can improve on, renovate, increase rents, that kind of stuff. We want ones that are kind of similar, under market rents where we can kind of increase that not rental rate, but also the upside potential, right? So for us, it's not our value add in most cases. We're not like with the multifamily. You're used to, painting, changing the floors, putting new appliances, make it look nice and new, basically. We don't really have much of that. There is some, I guess, to some degree. We might update the hookup pedestals there for people connect to their electricity and water and that kind of stuff. But the main thing was for us is going to be just one general improvements of the property, make it look nicer and cleaner, obviously, but kind of give it like a facelift, we'll say. But it's on the biggest part there for us. The value add is really expansion. So if we can find a great property that's doing well, the occupancy levels are high, there's enough demand there to expand it. So we'll have additional land so we can add on more RV sites or put on more, like tiny homes or cabins. bringing additional amenities, fun things that people would want to do there that just haven't been there before. Like maybe like obviously a big thing right now is pickleball, so we'll maybe add in some pickleball courts. If there's if it's something that's on a lake, for example, we want to bring in a big aqua park, which is basically like you've probably seen those like floating obstacle courses you can kind of climb on the water. Those are great fun for people, and even many times people aren't even staying at the campground. Those come and get a day pass, to get access to the lake or to whatever the amenities are there. And so yeah, so it's kind of just that kind of finding these things that we can add on to make it fun and attractive and get people to want to come there and choose this as their destination to go. And again, part of that is that online presence as well to get be found first of all, and have people make those reservations to come out.
What are your typical return profiles that you're looking for when you're looking at acquiring some of these opportunities, these
Sure.
campgrounds?
Yeah. So part of our criteria, I'll say first of all, the criteria we look for, because we're not going to be able to buy everything that's out there, nor do we want to. And I'd say a large portion of what's available are much smaller than what we would want to acquire ourselves. I mean, they might work great for like an owner operator that you don't have a lot of expenses or investors to respond to, I guess. But for the level of income we need to have enough to support a staff, because again, if we were replacing a owner operator that's there, we probably need to hire like 3 or 4 people to replace that one person because they do kind of everything. So we look for something that's at least about 150 existing sites. That can be a mixture of the RV and cabins and other things, but at least about 150 to start with, and then get room to expand from there. And I say also part of our criteria is it needs to be within about a 2-hour drive of a major city. With high gas prices in the last few years, people aren't really taking too many cross country big long trips with an RV because obviously they don't get good gas mileage. And so we want to have that kind of built-in user base that you live in the city, but you're willing to drive a couple hours to go out and have some fun and spend a weekend and come back home, right? So that's kind of our target market. And then so with these opportunities we look for, we have to kind of filter out the ones that don't meet our return profile, which we are looking for over a typical 5-year hold period. We want to see over that time an average of 12 to 15% cash on cash, 2.5 to 3x equity multiple, potentially let's say 18 to 25% plus IRR. It's kind of those are kind of our goal ranges. If something does not at least hit those, then it's not going to work. We're not going to force it up to try to say, yeah, we can hit that when we don't think we can, right? So we want to, at a conservative level, hit those numbers. So that way we know that if we could do even better than conservatively, we'll outperform that. And that's kind of what we look for, that has to have that to be considered a deal for us.
And depreciation, usually how much are you expecting?
Yeah, that's the surprising thing that most people get kind of shocked by. So the depreciation can potentially be very high, and that's not going to say in every case because each campground is different, unique, just like any property is. But the surprising thing though is that campgrounds typically can achieve much higher depreciation from that, the bonus depreciation from a cost segregation study than you'll see in some other asset classes. And one example, just I love to show people, is that back in 2022, when we still had 100% bonus depreciation, one of our properties we purchased got back 222% depreciation on the investor K1s. So extremely high depreciation on that specific property. But yeah, it's not uncommon to see well over 100% depreciation on a property.
Why is that? Like I'm used to multifamily where it's maybe like 20 to 40%, construction, we do build to rent development, that might be a little higher, but over 100%, how is that even
Yeah.
possible?
Yeah, and as you said at the beginning, just to clarify, I'm not a tax advisor or a CPA, right? So don't take what I say as authority here. But from speaking to these experts myself and asking, because I was always questioning how is that possible too, in fact, we've actually done a couple webinars ourselves with someone in there explaining that. But what it is when you look at how those costs are segregated out, right? So as we call it cost segregation, you put things into different buckets. In say multifamily or other buildings, anything structural like the framing, the building itself really cannot be accelerated. That stays in that the long term 30-year, we'll say, whatever, long term depreciation. Whereas all your fixtures, faucets and things like that can be in those other buckets accelerated in those 5 or 10-year categories. with RV campgrounds, there's not a lot of structures typically. You might have your main office, a bathhouse, a couple things, but most of it is all your infrastructure. So all these roads that are kind of run through the place, all the RV pads themselves, those utility connection boxes on each site. If you have a boat dock, that fences, all these things are part of, again, part of the purchase price. So if, say we're buying a property for 5 million, and they'll take away, say, I don't know, 500,000 for land value or something, and then what's left, most of that is going to be put towards those 5 or 10 year infrastructure categories. So therefore, a bulk of the purchase price can be accelerated in that year one, and then of course from there it depends on how much leverage you're using, could then boost that even higher.
What
So
is like
yeah.
a typical range, I guess, for depreciation? I know you
Uh,
said the max was over 200% back in 2022. I guess our
right. Yeah.
leverage was probably pretty high back then, just with where rates were. But what are they
Yeah.
now?
Well, obviously, yeah, back then, of course, we had 100% bonus depreciation.
And
2023 was 80, now we're down to 60, right? So,
yeah,
um, so to be honest, I say I don't know what to expect right now for this year. I'm not, again, not the tax CPA guy here to tell you how that's going to calculate in the end. But I'd say when you're comparing apples to apples, because even if a campground is getting 60% bonus depreciation, a multifamily is getting 60% bonus depreciation, self-storage or whatever is also getting 60%. It's kind of across the board. Everybody's at 60% this year, unless of course something changes. But so even at 60%, I'd still say most likely that depreciation will probably still in the end be higher than those other options as well. So that's it for the same reasons, just because the structure versus infrastructure. And so again, I don't want to give you a number. Even somebody's quote me on you said this much, so I don't know.
just like a
It's all
rough
going to vary.
estimate.
It's going to vary by property anyway, right? So I would assume, right, with the 60% bonus depreciation now, we're probably, I'd say, anywhere between 50 to maybe 80, 90, on a high end maybe.
Okay,
Again, I could be totally off on that, and it's going to vary by by property anyway. But I'd say if we're at comparing when we had 100% bonus depreciation, we were able to get almost double that, or actually in some cases more than double that. But I'd say in most cases you're not going to get that high. That was like obviously an extreme scenario maybe, but even at 60%, I'd say we should be at least around that much, if not a little more, just based off those factors and leverage and things.
wow. Okay, I might have to consider RV campgrounds as an asset class that I'm interested in now. Interesting.
Yeah, we've had some people that was their main reason for investing. It's like, well, I want the depreciation, and then hey, if they get high returns on top of that, great. But they needed the depreciation, and that worked out for them, and myself included. In that 2022 opportunity, I didn't know going into it how much depreciation we're going to get on that property. I actually sold a couple of my fourplexes I had in Arkansas that same year, because I was like, I'm not getting great returns. Those are more headache than benefit. I sold those off and reinvested it back into our campgrounds. And I did not do a 1031 exchange. So people are looking for tax advice, not tax advice here, or anything, but in speaking with other CPAs, they say, the ones I spoke with that are also investors, they say, as long as you can get a high depreciation anyway, you kind of still get the same benefit without the hassle of a 1031, right? So I was like, all right, let me do that. I'm just going to sell these, not worry about trying to find, all the things for the 1031 at the time frame and stuff. I'm just going to take that money, reinvest it into our campground deals. And luckily, I was in that property. We've got that huge depreciation as well. So I couldn't use it all in that year. Actually, I had to carry forward. So it's carrying forward into last year and probably some this year too. So it's pretty good.
Gotcha. Okay, well, I know we're coming up on 4:30 Eastern, 1:30 Pacific. Folks, those of you who have to jump off for meetings or anything during the day, Don's contact information is here on the screen. And then for me, you can reach out to me on LinkedIn. Not too many other Keshav Kalors there, so it should be pretty easy to find. We have a question coming in. Are there any portals where you find these properties, and what factors do you consider when making a purchase decision? Well, okay, one at a time. Where do you find these properties?
Yeah.
Yeah, what's your like deal flow like?
Sure. Yeah. So you're talking about where we're buying from. So first of all, I'll say we typically do not buy from brokers. There are listed properties that go through brokers. We found it in most cases the numbers they put don't work. They're of course trying to get high enough to get them a commission, but so when we go through a broker, I say they're typically listed around a 7 cap. We are actually calling it the campgrounds directly ourselves. And again, most cases we're talking about a mom and pop owner. If you call the campground, they'll probably be the ones to answer their phone, or at least they're there on site to ask for them and get a hold of them. And then it's just opening up a conversation to talk about when they're thinking about selling, and find those ones that are willing to discuss that anyway. When we're buying off market that way, doing our own essentially cold calling to these campgrounds, we are typically buying around a 10 cap even today. We've had even sometimes up to 12 cap. So you can get a much better purchase price going directly to the I'd say sellers, and they weren't actually sellers at the time you call them, but they're there to find and try to convince to sell, right? So you can do that through their Google search. Just look for campgrounds in a certain area you're looking for. We also use a resource called Good Sam. People are RVers, campers, you are probably familiar with Good Sam. It's basically a listing of all the campgrounds that are part of their membership, I guess. And so we kind of use that as a directory. We'll say, okay, if I'm looking for campgrounds in Georgia, let's open up Good Sam's Hughes in Georgia, kind of find ones that are kind of match our profile for what we're looking for at least the size or location. And then, start from there, just call them up and ask for the owner.
Gotcha. Okay. And then what factors do you consider when you're making a purchase decision, in addition to the buy box that you mentioned earlier and the return metrics? Anything else, besides, like you said, distance, the unit count, mom and pop?
Yeah. So it's also those are the main things. You have to hit that first before we spend any time looking at anything else further. I would say that's possibly could be we want to check their like their reviews they have right now already online. If they've got a lot of bad reviews, maybe find out why. Is it something just bad management, or they're just place is very run down and piece of crap or something that it might take a lot more work to get it up to where it needs to be. So yeah, some of that could be a factor. Like we'll look at we did a site visit one on maybe last year or 2 years ago, maybe. Looked great on paper, everything sounded great. We get there on site and it's really run down. Like all the buildings are kind of rotting, falling apart. It's almost like it'd be a total tear down and rebuild. At that point, it's not really worth it to do it at that point. So it's a lot of it's going to be also looking at that I guess we'll call it curb appeal, I guess, how well kept it is to start with, what people in the area already think about it. Because the problem is, if you have if it's known as a bad location anyway, if people are in that area, it's gonna be hard to really rebuild that name, the brand. Of course, if we take it over, we're gonna rebrand it anyway, rename it and stuff. But people are still gonna in their minds think, oh, that's still that XYZ junk property. We don't want to go there. Not even give it a chance possibly. So yeah, that could be a big factor as well to consider. Besides everything else.
And as far as selling out of these properties, I assume it's just like any other commercial, real estate asset, like, 2-3 months to close, things like that.
Yeah, we typically have a little bit longer time frame for closing, just because there's a bit longer due diligence period. But so typically we'll have like a 90 to 120 day close. Typically maybe within that 60 days of a due diligence period, just to have time to do a site visit, to have the inspections, and because you're looking at more than just inspector walk around checking all the outlets and things, right? We got to check all the if it's like on septic or whatever kind of sewer system they may have. Got to check that and make sure it's working and it's got enough capacity for more. Or if we need to may have to add in another septic tank, which can be a big expense as well. If it's got the swimming pool and things like that, you want to make sure those are actually working and not band-aided to make it look nice if it's actually got a big problem. So there's and of course go through all their books. We got to verify all their actual income, because that's I think is a big possible concern. I don't know how bad it is in most. I think most multifamily ones they typically are using CPAs and people that kind of handle that more so than your owner operators of campgrounds that may hide a lot of their income to not pay as much taxes. So sometimes you got to verify what they say with what they're reporting to the IRS and kind of work the numbers, I guess, and see if what they're saying is true or not. And also that's according to where doing those site visits, randomly could also help determine, okay, is this place filled up or is it not? On a major weekend where it should be at capacity, if it's only 0.25% filled, okay, there's a problem there. There may not be hitting that the numbers they say they are.
Got it. Another question that came in is, having RV spots / amenities requirement to make it a good target, or do tent only campgrounds also work?
Um, for the high returns that we need for our investors, a tent only campground probably would not work. We do typically on our campgrounds, we do have some areas we do have just for tent only. So we have, RVs, cabins, and some sites are reserved for tent camping. But definitely not majority there. And I think a big part of what draws people to these places is the amenities. A big thing in the last, I'd say, 5 to 10 years, maybe more so even the last five, a large percentage, in fact, the majority percentage of all RVers or campers are millennials and Gen Z. And they are the ones that are really demanding, high amenities, like Wi-Fi, fun things to do. Because like a lot of them are they're working from their RV or traveling, doing whatever they want. So working from home, we'll say, traveling across the country in their RV. So they want to have those things that are there to have their families have fun with and have that connectivity to such a do a webinar or a video or something from their RV. So yeah, those amenities are really essential. The ones that don't have those, it's kind of like, think of, like, I don't know if you've those listening have this experience, but like my grandparents, back in the day in their early 80s, they'd go camping all the time, and it's more of like you're getting away from it all. It's like there's nothing there. It's just more relaxing. Whereas these days, that's not typically what people are wanting. They want those fun things to do. They're looking for a fun vacation to go to. So if they're not there, you'd probably need to add them. So for us, kind of like that, we want at least some minimal stuff to start with, but again, opportunities where we can add in more to make it better, to get those people to be attracted to want to come to your campground versus the one that's maybe 5 miles down the road or something. So they are, I think, essential to have these days.
How recession resistant would you say RV campgrounds is as an asset class?
Sure. That's a great question. So I'd say they're highly recession resistant. I don't think anything I would say is recession proof, but resistant for sure. And there's definitely a few ways we can look at this. So in my mind, I guess I say the way I look at this is you've got, well, typically across the board, most people, they want to take a vacation at some point. No matter how much you love working, people like to get a vacation, get away. So you've got your high income earners, the ones that are obviously not going to be affected by a recession anyway. That maybe afford these the high end luxury RVs, $500,000 to $1 million motorhomes, right? That so no matter what, they're going to go and use those. Those are expensive toys to have sitting in your driveway or paying to keep in storage somewhere. So they'll want to go and use those as often as possible anyway. And then on the other spectrum, your low income earners that may not even have an RV or a camper, maybe it's a tent or something, right? But they still want to go and have some fun. So if, for example, let's say it's too expensive to go to Disneyland or someplace else that is high cost, but they'll say, but we can go to this go out to the lake that's like an hour or so away. We can go there and go camping, go some jet skiing and boating, have some fun. That sounds more reasonable and within a small budget, right? To pay for a couple of days to stay there, not too much for like rent a jet ski or something. So they can go have some fun at a low budget. So then you've got, of course, everybody else in between that can still, again, rent a cabin or something while they're there. That still just want to have a good time, have some fun. Maybe it's kind of a family family reunion or something to go do there. Oftentimes these campgrounds, we have like an event center where people do like weddings or birthday parties or this stuff is going on as well. Sometimes corporate getaways to go maybe zip line together or something and have a meeting. So all these different fun things are there to do to kind of keep people wanting to come there. And I'd say on a worst case scenario, let's say we go to World War III or something and nobody's camping. People are afraid to leave their homes, right? These places can easily be converted into like that RV park or drop in some tiny homes and convert it to like as a tiny home village or something, right? So there's a kind of a plan B or C, I guess we could go down if it came to worst case scenario. They can still be salvaged to still have at least enough income to kind of support the sustaining the property in the meantime. So yeah, so I'd say overall, but recession resistant, yes, they are. I'd say recession resistant.
And if we have World War III breakout, I think at least for me, I have bigger concerns than what's my portfolio doing. So, but still good to
Yeah,
know.
for sure. Yeah.
How do RV campgrounds compare to, how would you compare them to Airbnbs and hotels and maybe
Yeah,
any other alternatives that I'm not thinking of as an asset class?
sure. Yeah, so I'd say they're very comparable to Airbnb, short-term rentals, hotels, spa resorts, those kind of things. Uh, One, because first of all, it's these are short-term stays, right? So again, people are not typically living here. Other than maybe sometimes during, depending on where the location is at, through our winter months, we have a lot of seasonal campers. Like in most cases, a campground's going to not totally shut down, but a lot of the minis won't be open during winter. You can't really play pickleball in the snow and things, right? So, but you get your seasonal campers just looking for a place to stay. They'll still pay like a monthly rate to stay there for those winter months. Um, but uh, so going back here, so I'm sorry, what was the question again? I'm sorry.
How would you compare it to Airbnbs and
Oh, how
hotels?
to compare? Right, compare.
Just like as an
Yeah,
asset.
yes, sure. Sorry, I kind of lost my
You're
train of
good.
thought there. So with what we're doing here, like I said, these RV sites basically rented out on a nightly basis, right? So it's basically having hundreds of Airbnbs in one location, or such a hotel where people are renting by the room in a sense. Because we're making those reservations usually in advance. Sometimes we might have some sites that people could pull up to and be lucky to get, but probably not in a week, especially on the holiday weekend. They're not gonna they're filled, but yeah. So people are coming here for a short term stay, either for they're doing something in the area anyway. Maybe they're going out to let's say visit Yellowstone or something, but you're not going to spend your whole time in Yellowstone. You're going to come and park here, go there for a day, and come back and hang out and do some fun things, and before you go back home or something. So a lot of times it's just those short term stays for something to a place to stay while you're there doing something else. In some cases, it is the destination. Like this is the place you're going to go to because this is where you want to go for your vacation to go have some fun, play in the lake. Maybe go to a concert. Again, some of our properties do have concert venues as well. Or we have one in Indiana that's got a haunted house that's actually won awards for like one of the best haunted houses in that area. So that's actually getting ready to start up right now. So there's different things that will attract people to come there for different reasons. But again, it's very similar to those models. I'd say it's probably more similar to the hotel model than multifamily or something else, or even mobile home parks, because it's more that short term stay kind of feel. And looking at like your spa resorts, like not to compare this to high end like leisure, like Sandals resorts or kind of stuff like that, but typically when there's those amenities on site that people come out to go boating and go play on some of the we call them these like jumping bean things that are kind of kids bounce on and play on, right? So there's all kinds of different activities we're mainly looking for family friendly campgrounds. We do have a couple that are kind of more adult themed, I guess I'd say, because there's like bar and grill, and there's kind of more adult activities than so much for children. But for the most part, we're on that family friendly kind of outing. People are going with their kids to have a good time, have some fun. Of course, spend some money while they're there, on the different activities, buy some food and that whatnot. But yeah, it's much more on that short term stay. That's our objective for these campgrounds, right? There are some that are like we talked about before, there's RV parks that are more long term stay, but for us, it's more about the short term, because that actually is what produces higher revenues to get those higher returns for investors.
Why do you prefer it as an asset class, I guess, over Airbnbs and hotels, right? If an investor was to come to
Yeah,
you and say, hey, I'm looking at an Airbnb, a short-term rental opportunity, a hotel opportunity, and yours, like, why would you say that your asset class, why are RV campgrounds
sure.
superior as an investment?
Gotcha. So, well, first of all, if I ever say it's superior, it's everything's objective. People have their different preferences of what they want, right? But
Yeah.
but compare it to like an Airbnb. So if even if you owned your own Airbnb, um, at the house itself, you probably don't have a whole lot of things to do there. As far as you're not going to have a water park on your property, most likely, or zip lines and rope courses and that kind of stuff, right? So in comparison to that, I mean, obviously you're going to have all this other stuff that's the activities and things to do that you won't get it with an Airbnb. If you're looking at just for an investment perspective, right? If you want to invest in our Airbnb and that's not yours, you're not operating it. I mean, I don't know. I guess the return profile could be somewhat similar. I guess I say the downside with Airbnbs is, as people have seen, laws can change. They may make them illegal to have in certain cities, at certain times. So that's a risk there. That for our campgrounds, we don't have that kind of risk. Uh, Typically, most cities or municipalities are actually open to campgrounds. They want them in their area because they are a tax revenue for them. As tourists, people come out to visit, they'll spend money in the area as well. So they're definitely open to that for us. As far as comparing it to hotels or something, I mean, kind of similar thing. I mean, hotels typically we have like a pool and a gym, but that may be about it. Unless it's something that's like on a beach that has other stuff, obviously. Um, but they're and I'd say the risk comparison, hotels, for example, during the COVID, took a hit. People were not staying in hotels because they were, felt they were confined. They were, um, at risk, I guess, for infection. Whereas therefore Airbnbs did better because they got more privacy. That's kind of also where the campgrounds actually did very well, because people are now, you have your own private space like in your RV or something, but you also feel like you're out in the open. You've got some space between you and people, so you're not like indoors confined and can't do anything. You can actually get out and go, breathe some fresh air, take off your mask, so that kind of stuff. So there's a very different perspective on it for different reasons, I guess, for risks or whatnot. But so yeah, so I say is why this would be better potentially is we're not at risk for any government regulations to ban it, for one, and two, if there's something where people have to kind of you know uh, stay in place or something, right? Where this is an option where they're still technically in their own space if they have an RV, but they also have some freedom to kind of be outdoors a bit and have their own still kind of private space to be in outdoors, but it's still away from home.
And I guess would you say that it's more affordable, like at a better price point than Airbnbs and hotels typically?
I'd say typically, yeah. I mean, obviously, if you have an RV, that's one. The RV sites have different price than renting a cabin or something, and some of our properties do have hotels on them as well. But even if you're looking at renting a cabin or one of the hotels that are on our sites, they're, I'd say, typically lower price than what you're going to find at your other hotels or Airbnbs in the area. Um, and that's because we want you to come there, and we know when you're there you're going to spend money on other stuff too. So the main thing is not hit you on the high end, is to get you, avoid you from coming, but to attract you to want to come there and stay there, and then enjoy it, have some great times, take some pictures, share it on your social media, and then come back and do it again.
Are there like is there or not is there, but how much seasonality would you say there is between, the different seasons as far as kind of the collections that you see?
Yeah, well, there's seasonality in any campground, no matter where it's at. So even if you're in, say, Florida or Texas or something, you still have seasonality, even though you don't really get winter there. But there's, like the northern states tend to do better during summer. Obviously, people are getting away from the heat from the south, coming up north, and then the southern states do better during winter, as people get away from the cold to come south. So, but even with that, like I said, we have properties in both northern and southern states. Some that are, again, have cold snow areas where they essentially mostly closed down. We have them open still for those seasonal campers, we call them. And then we have ones in the south that are kind of just open year round. It's no matter what. So, but yeah, so that does come to play, and it does affect different areas for different times. But the way to work around that is again just planning in advance, knowing that, okay, you're for example, we've got something that's Midwest area. It's going to do probably best during the what we call the full camping season, which is typically from Memorial Day to about this time of year. Kind of from end of May to end of September is kind of the main camping season mostly. And that's when those are going to perform best. But again, during the winter, this is where also we see some opportunities for those mom and pop owners. Like a lot of the mom and pop owners might just shut it down completely during winter, and they'll go live in Arizona or something for summer or for winter and then come back. And we can say, okay, well, we can actually keep it open during those winter months. We reduce our staff down to maybe just one or two people, and just have those seasonal sites where people are just going to be paying a monthly rate just to stay there. There's really no amenities, but they just want a place to stay. So we can still capitalize on that to kind of keep them filled up as much as we can with that. Which again, it still provides higher, that will increase the income overall for the year, which therefore increases the value of the property versus when it was shut down during winter. The ones during the summer, kind of, there's a lot of that depends. The some people don't mind the heat, and they're fine to come there and staying there because they live nearby anyway. Again, if it's something that's already like on a lake, again, for example, or fun amenities, they're in the heat anyway at home. Like, might as well go out of the heat, go have some fun, go play in a pool and do things. Other people that are coming from other states to that area, and it'd be kind of more depending on if there's some kind of event going on that's bring them there, or they just like the area anyway to want to come to go to the heat, I guess. But yeah, all those things do come into factor, and you have to consider that with your underwriting and everything, just to see what opportunities are there to make it better and make it improvement. But yeah, there is that expectation that there's going to be fluctuations, right? You're going to have higher income when you're on seasons versus your low seasons, but overall year round, you're still going to be, if it's run properly, the overall revenues are still going to be a lot higher than you're probably going to see in other asset classes.
One of the burning questions that I had, since you've mentioned the numbers, is at the very beginning, what is institutional appetite for these assets? Is one of the reasons that the returns are so high is because institutions haven't, you know, just flooded to the space yet.
Kind of, yeah. I mean, I compare this a lot to those that have been around investing long enough. I would say, in the last, we'll say, I don't know, 5 or 10 years ago or something. Um, looking at self-storage and mobile home parks were kind of unknown. Not really a lot of people were doing it. Then all of a sudden they got talked about on podcasts, and some big name people were starting doing them, and then they kind of exploded. Like everybody's buying mobile home parks, everybody's buying self-storage, right? So they just kind of came out of nowhere. So I'm sure they were getting very high returns initially, and then as everybody started doing it, flood the market, those returns come down because the prices go up. And so I think we're kind of in that sort of phase right now where when we started a few years ago, there was really very little other competitors doing it at an institutional level. And so the prices were great. That's when we were buying those 12 caps and things. Currently, we're still sort of in that early growth phase. There's a lot more people I see doing it now than I did a couple years ago. As far as other people that have been in mostly multifamily space or other things that they've seen the returns, they've seen the things that we've been kind of promoting out there, and so they're seeking after those and trying to add those on and buy them. And so there is becoming a bit more of an appetite for other investment syndication buyers to go out there and buy them, which is good. I think it helps get the word out, honestly, because for me, when I talk to investors, a lot of the time is spent on just explaining how they operate, how to get those high incomes, right? Because people are not familiar with them, they don't they don't comprehend it. They're not familiar with it enough to trust it as an investment. And so I think in the next couple of years here, still we'll see more people still doing it, and it will become a lot more kind of mainstream. At the point where everybody's doing it, so therefore people kind of trust it more, they feel safe. But of course, at that point, then also the returns are going to come down. They're not going to be as good as they are now because you get in late to the game, you're missing that high income at the start. And for us, seeing that is on the way to happen at some point, right? It's going to be harder and harder to find those great deals. We are actually kind of moving to the next phase and starting to do some ground up development and just build our own campgrounds from the start. That way we don't have to compete with anybody. We can, not have to worry about trying to spend, months trying to find a great property. We'll just go and find some great land and build one. So we're kind of moving into that phase right now ourselves.
So it's our fault if anything explodes out of here about the word.
Yeah. Well, it's like I said, it's good. It's actually,
Yeah.
I don't see it as a bad thing. It's more of a, the more information you gather for people to have things to consider and options to compare, then that's good. So I'm all for it.
How do you typically comfort investors who are unfamiliar with the asset class, the business plan, and getting them on board about, hey, this is a good place to park your money instead of just your typical multifamily deal?
Yeah, and that sometimes can be hard. There's people that just have their mind that they don't care. They're getting low returns. They just want to feel safe. Kind of people that are happy with like a CD investment at the bank. They just want to feel safe, getting a low return. They don't care as long as they don't lose their money. So there's those ones are kind of a bit harder to get on board. But the ones that are kind of on the fence that really like it, but just aren't 100% certain yet. They're still not sure. Of course, I'll show them some of the properties we've done before, some of the expectations we've had for those, the returns they've done. But if it's someone that's never even, I guess, doesn't quite understand how they work or what it is because they've never been to one, I say, hey, just wherever you're at, Google some like family friendly campground near me or something and see what pulls up, right? And then just go there on a weekend. You don't have to make a reservation. You're not going to be staying there unless you want to, but just drive in and look around and see what's going on, see what's the fun things people are doing and how busy it is. Hopefully it's in a good area where it's actually busy and things are going on, but if it pulls up on your Google page, then it's probably one that has fun activities. They're advertising, right? So just go there and walk around and kind of see what's going on. And then a lot of times people at that point will kind of have that light bulb kind of like, wow, yeah, this place is a cash cow. I can see it now. And so then they'll feel more confident to say, okay, I get it now, and go on board with that. So I invite a lot of people to go do that. If you've never been to one, just go visit one and see, see what it is, what it looks like. And that might help you to picture it better as you're trying to imagine it as I explain it to you, right? So, but go seeing it firsthand is a very different experience. So do that.
Gotcha. Okay. Cool. And let's see here, coming up on the top of the hour. So, what were some of the failures that these are some of the questions we like to ask everyone who's on the show. What are some
Yeah,
of the failures that you encountered along the way? Let's stick to like the RV campground journey specifically. Like when you first started out in the space, what were some mistakes you made and what did you learn from them?
sure. Well, I'll even go, you know, before that, I guess my partners, right? They bought their first property before I came on board with them. That first property has had some issues, and one of them was being, as we talked about before, about the some of the due diligence and the inspections, was the pool. The previous owners, and to be honest, it's something we're discussing potential lawsuits here, but things were covered up. But the pool actually had a problem. But the day of the inspection, when we sent the inspectors to come and look, the owners had filled up the pool, so it looked fine. The inspector can't really inspect the bottom of the pool if it's filled up with water, right? So he looked, everything was fine, so as far as we thought. After it was purchased later on, discovered that the pool actually had a problem. There was actually a leak, and there's a repair that had been done incorrectly, I guess. And so it later turned into a bigger problem, and eventually had to just replace the entire pool. So a pretty big expense that was not expected to happen, because that inspection was not performed, and it couldn't have been performed. And so for us, I guess, going forward, as part of our things, like we have to be able to inspect that pool. So we actually are requiring to drain the pool so it can be inspected, and verified before, going forward with a purchase like that. That's been probably one of our more costly learning experiences. And then oftentimes, another problem we had is, one of the properties that we were purchasing. Sometimes the owners don't like to let their employees know that they're selling it. They're trying to keep it a secret, just because they're afraid they're going to, run off or something. So we've had in a case where they don't want us to talk to them before closing, which we also want to. We say, yeah, we want to interview them, uh, give them an offer so they know they have a job, right, and make sure they're who we want to keep on board. But and there's been one case where the owner didn't allow us to do that, and then kind of day before, basically told all the employees, we're getting bought out. You guys are probably out of a job. So people are like, what? And so the next day nobody shows up, and we're like, hey, where's everybody? So we have to call up everybody and say, no, you still have a job. Get here. We're happy to have you. Yeah, and so that can be, that could be a problem as well. So to make sure that, no matter what the owners are requiring, we make that as part of our offer. We have to have those employee interviews before closing, to extend them offers, let them know they have a job. So make sure they show up.
Yeah.
So those have been some problems there for sure. But I'd say that's, in most cases, that's one of our what would say biggest issues, I guess, or problems, is staffing, right? So these aren't like a multifamily where you just hire a property manager and they, do whatever. We of course do manage our properties. We actually we manage our own as well as other third party campgrounds. But even as that management aspect, right, you got to hire a general manager on site. You got to hire all the staff, because this is like you said, similar to a hotel. You've got staff running different things. Somebody to operate the camp store, somebody to handle the activities, somebody over the boat rentals, that kind of stuff. So there's always different people doing different things, and oftentimes, people will quit, or just not show up, or whatever. You got to deal with those kind of staff issues as you would with any employees. And sometimes, especially when you have to replace the manager, that can be a pain. You have to, go through and try to find somebody, competent and able to do that, that can do it well. And sometimes you have to go through a few to get to that point, and so just be willing to that you or your upper management, somebody will probably have to go and step in and fill in for some time while that gets done and replaced, make sure that it still is operating well, and living up to the needs and expectations of your guests there. So that, again, that can be an issue, especially I'd say for those seasonal campgrounds where you have to kind of let most of them go during winter anyway, and then hope they're still around to rehire, in springtime, or you have to find new people to replace every year. So that can be somewhat of a challenge for sure.
And how do you give back to your community?
Oh, that's a fantastic question. So we've done, on some of our properties, we've done some different things. Like one that has, we do like a 5K run, kind of, it's an annual thing, to help raise money for different charities or things in the area. We do different events that we actually are we try to be part of the community when we have these campgrounds. It's not just there as a place to people go spend money, but we actually try to be part of the community. So we get involved. We actually have a mascot that's part of our company that we have some of our employees dressed in the whole outfit costume and go to like schools or like parades and things like that to be involved and let people know we're there. Do different things to kind of hand out things at those places. So yeah, we try to be what we can to help be part of the community, be known and recognized as not just the campground, but their community member. We join up the local what do you call them? The business boards that are in the areas. I forget the name of it right now, but you know what I'm talking about. The Chamber of Commerce, right? So we join the local Chamber of Commerce and kind of be involved with that as well, and participate in ideas and events and different things. We've done like blood drives at the campgrounds, all kinds of different things to help bring people out there for different reasons to come to the campground. Also, but we go to the communities and help do what we can to support the local communities as well.
Okay. Well, great. Well, thanks for joining us today, and thanks for that great conversation about RV campgrounds, John.
My pleasure. I'm always happy to talk about it.
Yeah. So to learn more about investing in RV campgrounds, feel free to reach out to Don at his email, don@beyondercamp.com. Am I pronouncing that correctly?
Yep, that's great.
Okay. Or his website, beyondercamp.com. We'll be including the links in the show notes. And again, thanks for coming in to talk with us. We learned a lot about RV campgrounds, and my interest is definitely piqued. So I might reach out for more information.
Perfect. Thanks a lot. I appreciate the time.
And for those of you listening at home, don't forget to like, subscribe to our podcast on whatever platform you're listening to make sure that we can continue bringing you the best educational content. Thanks, everyone. And until next time, keep learning to invest for generational wealth.